Hey guys, Scott here. I'm going to show you today me losing some money for a change because I was in drawdown overnight and I want to show you the trade that did it to me. I think it's really important that we, in our trading, we try and be legit and we try and desensitize ourselves to the strong emotions of trading. So what happens when you get on the internet every day and pretend that you just win, all you do is win, is that you start to become surprised when you lose. And winning and losing should feel about the same. It should feel vaguely annoying, but not devastating. You should feel something. If you're feeling numb after a losing trade, it's probably a sign that something is going on under the surface that you're unwilling to face, some sort of trauma involved. So I'm gonna scroll through this. I'm gonna show you the trade that I took, and I'm going to show you the rationale for it. So I'm in cocoa. I'm in December month cocoa futures. Now, the first thing we always do when we look at a chart is it a trend or is it a range? This one's fucking obvious. This is a trading range. It's not trending. No one could say it's trending. But we have a short-term leg up here with some sort of trend liney type thing. Roughly there. So I got short right here at the break of this low with the stop above the high. Now the rationale for this is that if you're going to short a trading range, the place to do it is at the top of the trading range. So we've broken out to fresh highs now. The market has dropped. It's broken this trend line. Every bear in the world saw this trend line and got short. So what should have happened is a break of a trend line, maybe a little retest to about here, and then fall away down to about here. That was actually the highest probability outcome. But it's a fundamental principle of markets that when a low probability outcome happens, you get a bigger move. So the market should be going down, but it doesn't go down. Look at this bar. Open at the lows, close at the highs, very big range. At this point, we're very close to these stops here. Like, we absolutely know that there's stops at any all-time high. So, okay, so this is a yearly high or something like that. So at this point, the bulls know if they just get it from here to here, they're going to cause a chain reaction and it's going to be off to the races. So what we have here is very little overlap between these two massive green bars. It's almost impossible to make a bearish case. It's like, this is one of those times when if you're a bear, you've got to cover now or you're in for a kicking. So this is a market with a very strong breakout. It cost me money. I lost 1% of my account on this trade. And yeah, I'm ready to do it again. So I want to show you one more. Okay, so this is coffee. We have a market that's going down. It's not going down in a very convincing fashion, and we have a retest of these lows. So this retest is happening here. This little formation that I'm gonna highlight. It might not look like it, but what this is the market trying to go down again and failing. If we get any further movement up from here, that's likely to set off a chain reaction. So nothing, if it's either going to keep going or it's going to break these daily highs. If it breaks the daily highs, it's probably going to go at least to this old high, and probably if it breaks here, roughly a 60% chance of getting to here, and probably 30% chance of getting all the way up here. So that's an interesting trade. It's a trade I'll be taking today. There's another couple that I'm taking today, which I'll show you. USDJPY. Now this is a trading range. We've got this very strong move up here that's pushing into resistance. This is the all-time high here. So we see the market trying to break up above here. A close above here sets off a chain reaction. Everyone has to be on board. but the market has tried to go up and rejected it with this bar right here. This is a complete rejection. Now, let's dive in a little deeper and go, this is a rejection of the old highs. Now this bar, it's trying again. Can it get to the old highs? Can't even get there, let alone close above. So at this point, we have a clue that the market is weaker than we thought at the old highs. So this is a very nice risk-reward opportunity. So here's how you do it. We go short on a break of here. We put a stop above the highs here. Really nice trade. Where can we expect it to? Who knows? At least to here would be a reasonable first target, and you can see this is roughly 2 to 1 towards the first reasonably chosen target, and it's probably a smaller chance of getting a massive win. So, okay, thanks.